What a joy to be with you both. I have a feeling this time last year there might have been a few more blockchain and crypto conversations being had, but we've dialed back our enthusiasm to be more reality-based. And I just want to take a temperature check in the room for a moment. Please put up your hand if you own crypto, you understand crypto, don't need it being explained. Thank you very much indeed. Probably only about a third. So, Ola, I'm going to put it to you. Quick rewind, blockchain. What does it mean to you in this region on the underlying technology here right now?
Great. First of all, really excited to be at QAF today, sharing the panel with you, Caroline, and Yat as well. So a quick refresher. I think often there's confusion about what blockchain is. There's different namings. Some people call it cryptocurrency. Some people call it digital assets. I think most recently Web3 as well. And different people think about it in different ways. I think blockchain fundamentally, and the way we think about it as well at BitOasis and different people as well in the space, it's fundamentally a technology, and a technology that changes the way we exchange value online. And this value could be money in form of tokenized currencies. I mean, there's different iterations of that. It could be real assets that are tokenized. Could be real estate, could be art as NFTs. It could also be as well what we're seeing right now in terms of shares that are tokenized securities as well. So this value takes different forms, but the true innovation of blockchain that it allows individuals to transact this value online without relying on a central party. And with that is disrupting existing industries that rely on that in the payments. Let's say example is the banks, the payment companies, could be payment networks like MasterCard and Visa. But in other industries, it could also be creating new forms of business models where with individuals owning their assets and being able to transact without central parties, there's all sort of different ways they can monetize on that asset as well in the coming years as the innovation develops further in the space.
The problem was that everyone associated with speculation and assets rather than property rights, rather than securitized assets overall. Yeah. Ultimately, what are people missing now? Because you're a big advocate of really actually how much there is within the Web3 crypto economy still. Because many would say assets are plunged and volumes are down and it's illiquid. What do you say to that?
Well, I mean, first, it's a great pleasure to be here. Thank you for having me. I think the first thing is this thing what we describe as the open metaverse, Web3. Economic activity last year was over $30 billion just in that particular space. Which is roughly the same GDP of Iceland and Cyprus, for instance, right? So just to give you a sort of context. The other thing is that within this space, these decentralized autonomous organizations, the ones that hold basically, I guess think of them as like, federal reserves of countries, that equivalent is about $12 billion. And the communities in those sort of Web3 spaces are drawing on those resources. They don't go into traditional VCs, they don't raise money in traditional ways. They can literally just get it from those sort of online economies, thereby also creating employment for millions of people, specifically in spaces that have been financially excluded, like in the Philippines, for instance. Because
with Axie Infinity?
As an example, Axie, but not just Axie, basically all other areas in this space in what we describe as the open metaverse, which is powered by blockchain and Web3. And so this $12 billion basically is where people are able to sort of draw funds from, build economic activity, create jobs. And now there's a mushrooming of economic activity resulting in effectively what we think of like almost a new nation state, but it exists entirely digitally, where there's jobs, there's job creation, there's employment, and of course, these non-fungible tokens, which is the way in which these digital assets are sort of represented, become the store of these sort of cultural artifacts. I think the challenge that people have is, when you talk about prices, for instance, is that they're not really thinking of it in terms of what it means economically to these places. There was speculation before, and there still is some speculation. That's because the financial markets came first. And that's because of the way crypto was born. Crypto was born really as a financial change agent in the early days. So it was starting from a Wall Street narrative. So just imagine if an economy is run 80% or 90% by people from Wall Street, what would it look like? It would look probably pretty speculative. It probably will have a lot of financial stuff before the rest of the population comes in and sort of introduces some of the more fundamental things like culture, value, traditions, which is what's happening now. So the shift is happening. Just one data point. Last year, in what was supposed to be this bear market, $24 billion of NFT sales took place. But the key thing is not the fact that it's 24 billion. The key is that 90% of that 24 billion went to creators and owners of these NFTs, which means the majority of the value went to players in the ecosystem.
Players who often, though, were having to borrow money to be able to afford the right to play. And then that was some of the criticism, was that some of these players, particularly in the Philippines, actually couldn't afford first entry in these pay-to-play models.
But that's not correct. Because these guilds, the birth of Axie Infinity was a guild. The guild actually bought the assets. They lent it to the people in the Philippines. They then generated income from that. And then from that experience, basically it's almost like they became Uber drivers first. Then they made some money. And then with that money, they decided, in some cases, to buy their first virtual car, or in this case, an Axie, for instance, right? So the value, but the problem is that a lot of people don't understand that when they're not in it. And it's so very easy to sort of criticize it from afar. But actually, millions of people became financially included in a manner that wasn't possible before.
It is and has been very easy to judge and have negative headlines thrown at crypto, particularly by those who are sort of half-versed, and some that are full-versed but just have a different perspective entirely. If Rabini was sat here right now, we'd probably be having a slightly more rambunctious conversation. But I'm interested, Ola, from your perspective, what's the real value to the people that you serve? Because remittance must, for me, when people say, well, crypto has served no real value apart from value destruction for speculators, you say, no, people can send money home, and they can do it with less friction than which they currently experience.
I'm glad you asked this question. First of all, we like bear markets because we can focus on building real products. We can focus on getting licenses. We can focus on working with the regulators and build real infrastructure and substance. So on the speculation part, and I think also your question in terms of the real use cases, ultimately there are various commodities out there that get speculated on. It doesn't mean that they don't have utility. And cryptocurrency, crypto assets, digital assets, and the different sort of applications of that is similar to that, right? So when we look at blockchain and the tokenization movement overall, I would say that be it money, be it real assets, or digital assets, what we find is that fundamentally, when it changes transaction, what it means that users or holders of those tokens can transact in a seamless, transparent, and also cheaper way. In the form of money, that would mean instant cross-border payments on the public blockchain. So that's where you have sort of the scale and the global sort of cross-border example. It means unlocking a lot more value when it comes to remittances, cheaper way of sending money back home, and democratizing access.
How much cheaper is it, for example?
So take the example if you want to use a stablecoin. So you can sign up on a platform such as BitOasis. So today we're the largest in the GCC, so we're the market leader when it comes to secure, easy, and regulated way for buying, selling, and holding crypto assets. So you can essentially use open up your wallet, verify your account, fund it, buy USDC, and send it to a wallet holder on another platform, be it Philippines or India, so where there are other platforms that are present. And that would be instant, and it would be fractions of what the cost would be in other remittance, or even banks as well, where you are also exposed to FX rates and other hidden costs as well. So that's one application. I think the interesting, and I would say the biggest use case that we find specifically here in the Gulf, that also governments are interested in, is overall tokenization, and what tokenization can actually bring to existing industries and new industries as well. So platforms like us in BitOasis, obviously, we provide an easy way for people to buy and sell crypto assets that could also be hard assets that are tokenized into liquid form. We already built that infrastructure, be it on the trading side, be it on the custody side, to cater for blockchain-based tokens. A big movement that we're seeing right now, and that's across the whole Gulf. I'm based in Dubai. In the UAE, we're seeing big interest in that, be it Dubai, Abu Dhabi. In Saudi, we started seeing more focus on tokenized securities, and they're looking into crypto as well. I think to some extent in Qatar, we're seeing that interest, where you can obviously not only focus on the money aspects of things. Remittances is a very big industry, obviously, in the GCC, and there's a big focus on that. But what other assets can we also tokenize so we can provide more liquidity to those assets? We can provide more transparency and more participation from an investment standpoint as well with that, unlocking $1 trillion of value, obviously, on a global scale, obviously not just on the GCC scale, where there are new industries that would be opened up. A recent statistic from BCG says that in the next 10 years, through tokenization and tokenization of assets today that are illiquid, that potentially can be liquid.
Real estate, for example.
Exactly. It's like close to $16 trillion in terms of new value that would be unlocked by providing more liquidity and transparency through tokenization for those assets. And that's a big movement that I know for a fact also in the GCC. A lot of governments are looking and trying to find the right frameworks to enable that in a regulated way. But also platforms like us that get regulated. We've already built that infrastructure from a liquidity standpoint, from a regulatory standpoint, and also the means for people to buy, sell, store, token assets that will become the platforms where we'll support that movement as well.
It's interesting, you're both sort of infrastructure players to a way, because many would say what you've been building is an investor for more than 400 companies that you've invested in within the portfolio, but actually you're helping companies understand how to mint, how to actually do the NFT in and of itself.
Right.
You're operations driven as well. But Ola brings up a really good point, and it's regulation. Interestingly, neither of you particularly based in the US, and I'm interested as to whether you're seeing the US losing perhaps some of its ability to grow crypto businesses, keep its crypto-focused businesses, because there is no regulatory environment that's clear yet. Instead, it seems to be, Moni would say, that it's sort of regulation by enforcement. What are you seeing?
I mean, first, certainly the UAE and this region has been very sort of positive, but look at Hong Kong, for instance. Hong Kong has completely sort of progressed in terms of becoming crypto forward, right? They have crypto ETFs. They're about to launch sort of a way in which retail can trade in crypto, for instance. Licenses have been passed out. And of course, we can also make the assumption that Hong Kong isn't going to do anything without the permission of someone else. So this is obviously a broader strategy. But in Asia, for instance, Japan, for instance, has made Web3 and the metaverse part of its national agenda. Prime Minister Kishida-san has actually put it as part of his roadmap. They've actually launched an NFT white paper. They have a DAO study group, for instance. So you can see this all changing. Even Europe with MiCA is now actually putting forward token rules. When has Brussels been forward on any kind of innovation in the past?
They're quite, on regulation, they're quite forward.
Well, they are forward, but in comparison to what's happening in the US, this might be one of the very few technological areas where the US is willingly giving up their prior lead. And this is also one of the reasons why I think particularly the countries that we're speaking to are excited about this. Because the other narrative is around what's happening in the past internet in Web 2 is a form of digital colonialism, meaning that everyone in these countries are using Facebook, are using Amazon, are dependent on LinkedIn. They're basically dependent on US technologies. So Web3 actually provides a paradigm in which they no longer are dependent on US technologies. It's a new paradigm, it's new technology, it's decentralized, it's something away from the traditional power structures. This, by the way, doesn't just translate into applications like social networks or gaming, for instance. It also applies to the role of the US dollar, currencies, the power of that being sort of...
So you're trying to tell me that the company called Meta isn't going to own the metaverse?
Oh, they haven't owned it ever, frankly speaking. And I think one of the reasons why Meta struggles, and I think why the narrative on the metaverse has been so negative, is because many people do and have associated Meta with the metaverse, because they changed their name, and it was a brilliant PR campaign, but it has nothing to do with the open metaverse as we see it today. Because you can't make money in something that Facebook has built, for instance. And even though they're being active in it, the economic activity that's taking place in Web3 is real and it's sizable and will grow into this multi-trillion-dollar space. And I just want to
cultural.
And it's cultural. And I just want to touch a little bit on sort of what was mentioned here, because when you open up everything in a public data infrastructure, which is what blockchain is, then what happens is that intermediaries can go and trade and create value from the data as a commodity. We did this in Web 1 with information. The fact that I knew what the price of some commodity was in China was the reason I could charge someone in America for the right price. Until then, information was that arbitrage. Now, with data being open, I can now measure the value of that data. It may start with remittances, but eventually what happens, people come in and enter the space and say, hey, I can do this cheaper, I can do this better, I can find different services. And speaking of cultural context, when, for instance, someone issues these NFTs, it may have an initial utility only, which might be decorative or might be used in a game. But because it's now an asset, because content becomes an asset in Web3, someone can come in and provide a lending platform, or someone can basically create third-party sort of services for it, creating additional network effects that have cultural context. I also think of Web3 and sort of blockchain as very much this next generation's cultural movement. It is their sort of way to speak in this world. I don't think of blockchain purely as a technology. I think of it as a socio-political sort of evolution of the digital world.
It's interesting what you brought up about the US is willing to let its talent and lead talent leave. Some of them are talking about coming to Dubai or the Middle East and putting their international hubs here, or indeed you're already seeing CEO of Binance living in Dubai. Do you like the competition coming your direction, Ola?
Ooh, so, I mean, competition is always good. The market is growing. The pie is growing with that. Naturally, that attracts better regulation as well. Regulators start taking the industry very seriously. It starts attracting other players internationally into our market. So competition is always welcome because I think it really raises the bar on everything. For us at BitOasis, obviously, we're regulated in the UAE, we're headquartered in the UAE, but we focus on the wider Middle East region. It's been
You've also got the first license, right?
Yes, we were the first platform to get the operational licenses under VARA in Dubai. We've got also our in-principle approvals in Bahrain under CBB. And we're working with regulators closely across the Gulf and in the region to be also first regulated platform in Saudi and other larger markets across the region. So overall, I think what we're seeing is that there's a lot of momentum on regulating this industry in the Middle East. In fact, I think there's a lot of momentum regulating everywhere outside probably the US. I think to some extent, Middle East and Asia are sort of like really leaping ahead when it comes to regulation. Mostly, obviously, Hong Kong. I would say Dubai also sort of taking the lead on putting really innovation-friendly regulation also that is industry standard, without sort of compromising on the quality of regulation and compliance overall. So with that, obviously, there are different players coming in. I think for us, we're focused on providing safe, regulated, and localized access for crypto assets and in the future, other tokenized assets on our platform. We're focused on specific use cases that we find are native to our region. So remittances and payments is one of them. We were the first platform in the region that had a partnership with MasterCard to enable crypto-backed debit cards. Later on, there are other use cases that we'll be working with MasterCard specifically on payments and financial services. And a trend that we're seeing across the region, outside of the Gulf, I would say, that would be interesting for regulators to also look at. We've been in talks with different regulators, specifically Egypt, I would say, and Morocco, is access to tokenized dollars, and that's stable coins in countries where there's high inflation rate, but there is an easy access to those. And I think that's a challenge that regulators across the region will have to seriously look at. And I think that's where the tension between innovation and regulation ultimately lies. So we're yet to see, obviously, how that develops. We're a partner to regulators here in the region. I mean, we believe that this industry is not going to grow without having the right regulatory and multi-stakeholder approach. And we're the main platform that does that. And I believe this is how we would win the trust of our customers, the trust of our regulators, and the trust of all the partners that we work with in the region. So competition is always welcome, but we're obviously always determined to be the main leader in the region.
Can I just quickly touch on the US regulation? I know we're short on time.
Within 30 seconds.
Quickly, I think the narrative, anti-crypto narrative, is a purely democratic one. That's the other thing. So there's political party lines right now. So I don't think that the anti-crypto narrative in the US is specifically a US as a country one, but it's going through political lines. And so that's why a lot of people in the industry are saying, wait for 18 to 24 months and see what happens. And you can never count out the US. The US may be falling behind on some stuff, but if they do come in, then there'll be a force to reckon. And I think that will happen in about 18 to 24 months.
Very succinctly put. We talked trust. We didn't mention FTX once. I thank you very much.
Great.
Thank you very much indeed. Yat, Ola,
you.
what a great conversation. I appreciate it.
Thank you.